We detected a wealthy investor betting $1 million on Viking Therapeutics, ticker symbol VKTX, today, March 20th. And so in this video, we will analyze this unusual $1 million trade to find out if this investor is bullish or bearish, and then show how we are setting up an options strategy to reduce our risk in order to profit from this unusual option activity. So without further ado, let's get to the analysis as usual. On the options time in sales tape, we can see here at 9:53 at the 45-second mark, 5,000 contracts or trades for the April 19 options, 100 strike calls, and the 120 strike calls. Paying 300 for the 100 strike calls, selling for 90 at the 120 strike calls. So when we calculate the trade costs, 300 minus 90 equals $210 per trade or contract. And since there's 5,000 contracts, we can see here it's a total of $1 million. So what is going on? Is this bullish or bearish? Let's take a deeper look at the chain. So April 19th, 30 days away. We can see here at the 100 strike calls, we have an open interest of just 2,000. We have a volume of 7,000. For the 120s, open interest of 700, 6,000 volume. And since the open interest for both of these strikes is less than 5,000, the unusual trades, these are opening trades. Okay? And as we went over, they were buying the 100 strike calls, selling the 120 strike calls for 210. Okay, and so when we analyze this trade, you can see what it looks like here on the profit loss diagram. You can see actually it is already profitable by about $40 per trade, because when this trade was made, Viking Therapeutics was trading at $64, and currently it's already up. It's at $71. So that's why this trade is already profitable. And we can see that this is clearly a bullish trade because you can see the delta here is positive. Okay. However, the theta here, it's a -5. So there is a time decay risk on this trade, which is quite high. Okay. So that is why we set up our own option strategies in order to reduce this time decay. Now, if you're not familiar with this company, though, Viking Therapeutics, it's a clinical stage biopharmaceutical company, a biotech stock that is still in its clinical stages of doing clinical trials. So it does not have an actual product approved for the market yet. And so this is considered a speculative stock. And so that is why we don't put a lot of capital position into these types of stocks. And that is why in our criteria, when we analyze the probability of profits, it is actually lower in probability of profit in comparison to our members only trades that we share on our website. So if you are interested in the higher probability of profit trades, make sure to go to our website. I'll put a link at the top here. Even though this is $1 million trade, it does not meet the standards of our membership trades, which are all exceeding $1 million, but with a lower risk and higher chance of profit in comparison to this trade because of the nature of this type of company here. Okay? So keep that in mind. If you are going to trade this, it is considered a speculative type of trade, okay, with a lower probability of profit in comparison to the ones that we share on our website. Okay, so that is why for our trade, you can see what we did was a little different. You can see what we did was for the April 19th, the way we traded it, we went to the April 19th. This is our position at the 110 strike calls. We sold this call. We took this premium that we sold to help pay for the long call here at the 100 strike calls here. Okay, so here's our position. Okay, so when we analyze this trade, you can see that the strategy that we used is a diagonal strategy. And it costs $210 per trade, which is exactly the same as the unusual trade, 210. Okay? So why did we get into this trade if it costs the same? Well, because when we take a look at the Greeks, you can see that our theta is only negative 0.32. So that's very close to zero. So we don't have a time decay risk on this trade. In comparison to the unusual trade with negative 5. Right? So we don't want to have that risk of losing value on our trade on a daily basis of this time decay. Okay? And so our trade, we can still go long and bullish with a positive delta and still be able to make quite a lot on this trade. You can see here on this graph here, our max profit right here where the blue line here is at its peak. The profits will show up over here on this box as the mouse hovers over that peak. You can see here it's about $1,230 max profit on the expiration of April 20. Okay, so 1,230, we can see how much that could potentially make divided by the 210 of initial cost times 100 would be 585% profit. So the reward is much in our favor than the risk on this trade still, right? So this is how we can reduce our risk and also increase maximizing profits as well. Okay, so that is how we are trading this. And again, we don't have to position size very much because this is considered a lower probability of profit trade in comparison to the trades that we share on our website. We'll put a link to our website at the top if you're interested in gaining access to the higher probability of profit trades that the wealthy investors are trading. Let us know in the comments below, what do you think about Viking Therapeutics? Do you think it will go up? Will it go down? Please smash the like button as usual and have a wonderful day.